All right, everyone, here we are with ticker symbol WKHS, Workhorse Group Inc. Before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, Workhorse Group Inc. has actually had some volatility here. We're actually seeing it rise up, broke through resistance, hit new highs here about $16.58, started to drop, and it actually held itself up here at the end above resistance, but they haven't been able to break through the 50-day moving average for the bulls to get back into bullish territory. They broke through it, but they haven't been able to stay above it. There's been a rejection there, and they're just slightly holding up resistance, which is a good sign of taking the next step to get closer to it, to get back into bullish territory. So we're going to have to pay very close attention to how this stock is reacting. I'm assuming a lot of bulls have actually believed that $15 and some change was a steal, because that is one of the lowest points that this has actually reached in this bearish run, and it actually was one of the lowest points that we've seen it in a while, and actually seems to be a discount in the eyes of the bulls, because you can clearly see that the bulls have tried to dominate this and they rode it up, and they're trying to hold this up, getting closer to the 50-day moving average. So our resistance level and support have slightly changed. We're going to look at the importance of these numbers. Now keep in mind, 1513 is one of the most important support levels in the long term for the next couple of days and weeks if it was to go in a bearish trajectory. But right now we're going to look at what's important based off of what the chart is showing us. So the bulls are going to want to try to reach this high again after breaking through the 50-day moving average, which is 1657, to pull further away from it to reach newer highs. But before getting there, they need to break through this first resistance level, and that's 1612. They need to turn 1612 into a support and start to reach newer highs and new resistance levels to break through the 50-day moving average and get back into bullish territory. Now, the 50-day moving average is 1613. Super important to keep that in mind. 1613. It's only 1 cent away from resistance. So the bulls want to break through resistance and then break through the 50-day moving average to reach newer highs and get back into bullish territory. But their first step is getting 1612, turn into a support so they can pull away from it. Now, on the other hand, we have what the bears want. The bears want to tear this down, and their goal is to break through the lowest point reached in the day after this bullish run and trying to bring it down, and that's 1556. We're currently at 1590. We're below the 50-day moving average in bearish territory. So if this support is broken through, I do want to emphasize to all investors, pay close attention to how quickly this is hitting newer lows, how it's pulling away from the 50-day moving average in a downward direction, and are the bulls trying to reappear to stop this from hitting newer lows and bring this back up, or are the bears dominating this by bringing it down to hit newer lows? So if 1556 is broken through, we are getting deeper into bearish territory, and I'd pay close attention to how this stock is reacting and how quickly is it moving down to new support levels. As always, if you found these cues helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.